Hey, good morning. We're just going to give everyone a few minutes just to get connected and we'll get started here just about 10 a.m. Good morning. If you're just joining us, we're just going to wait a few more minutes and let everybody get a chance to get connected this morning. Hey, good morning. If you're just joining us, we're just going to wait a few more minutes just to give people a chance to get logged in here, and we'll start shortly after 10. Hey, good morning. We'll just give it one more minute and then we will get this started. All right. It's just after 10, so we're going to go ahead and get started as people still get connected to the webinar. So good morning. Thank you for joining us today for our August training session. I'm Jen Martinson, and I have with me Jamie Wilkie, a partner at Lauterbach and Amon that most of you probably know on this call and recognize. So we have a fun, exciting topic for everyone today. This seems to be something that gets asked for quite a bit. So as you can see, we're going to talk through best practices for wrapping up the audit and some of those final reporting items in the client prepared sections of the audit, just to give everybody some tips and tricks and things that can kind of help make that process go a little more smoothly for you as well. So just a few housekeeping items. If you have any questions that you'd like to ask as we go through the presentation, I will be monitoring the Q&A and we'll try to get through those questions as they come up. Otherwise, we do have time at the end for questions as well, but at the bottom of your screen, you'll see a Q&A box. If you click on that, you'll be able to enter any of your questions in there. Also, these slides will be available as well as a recording on our website shortly after the session today, so be on the lookout for that as well. And with that, I will turn it over to Jamie Wilkie.
Thank you, Jen. Good morning. We certainly appreciate everyone joining us this morning. As Jen mentioned, this tends to be a topic we get lots of questions about, and this was actually a client who requested this training this morning. So also a plug for anybody who has kind of training ideas. Certainly we do this each month for you all. So by all means, we're always open to any new suggestions or ideas. Both my contact information and Jen's contact information will be provided in the slide decks as well. So as Jen mentioned, we want to kind of cover two key topics, really what I would call those best practices as you're wrapping up field work, going into kind of the draft phase of your reports. You know, what are the client specific things that you need to be responsible for and aware of? And then specific to that, there's really a few key components of the final audited financial statements that you all are responsible for or involved in preparing. And so we really want to focus on, you know, some of those best practices as well. Just a note, I will be covering as part of the last part of the presentation, the sections that are required for the Government Finance Officers Association Certificate of Achievement for Excellence in Financial Reporting. I know we have many of you that participate in the program, so obviously I would encourage you to stick with us through the end of this. For any of those that might be interested in the program, this would be a great way to gain a little bit of knowledge with regards to what additional information you might be required to prepare to meet the certificate needs. So really a good amount of information on the transmittal letter and the statistical section towards the end. But by all means, we will not be offended. Any of you who aren't interested, if you want to drop off of the webinar, once we get through discussion on the management's discussion and analysis section, certainly, you know, feel free to go on with your day. So first of all, we want to start with this idea that, you know, the auditors, whether that's L&A or for some of you, I know we work with you in a financial services capacity. And so you might be working with another audit firm to wrap up your audit. You know, auditors leave field work and typically most go into what we call kind of that draft phase. And really, I think there's some ambiguity sometimes of, you know, who is working on what, and a lot of that's probably happening behind the scenes. Really, you know, wanting this morning to kind of give you all our best practices of if we were sitting in your shoes, you know, how would we approach receiving the draft from the auditors and what types of things would we be looking at? So I think first and foremost, you know, the auditors potentially have journal entries that were proposed during testing. Certainly we encourage clients review those in detail. I know the L&A approach is to try to discuss those with you during field work, but you know, sometimes once you see them in writing, you're like, wait a minute, you know, that's not what I thought was going to post. Ask those questions. One of the most important things during the draft process is really nailing down those numbers. We really can't continue with the remaining sections of the document until we are both on the same page with regards to the actual financial statement numbers. So with that, really doing a thorough review of the fund level financial statements, comparing budget numbers to your internal budget documents. Compare those fully adjusted trial balances on your system once you've posted our entries, rerun trial balances, make sure things like change in fund balance and, balance sheet and income statement tie. That's a good way to also make sure that any of those adjusting journal entries were all posted correctly, really a nice check and balance there. Reviewing the note disclosures and the required supplementary information back to some of your source documents. For example, maybe your capital asset records, maybe your IMRF actuarial report for GASB 68. Just kind of haphazardly going through and making sure that you've tied out any of those significant balances. While certainly we work to provide you guys a quality product, we're human too. And so part of the review process is the client review side. And I think a lot of that centers around the idea that, when you read that audit opinion, you as management are in fact responsible ultimately for those financial statements. So really making sure that, you've gone through and done that review. Reviewing the dreaded entity-wide financial statements. I know everybody gets scared of GASB 34, but there are some conversion schedules that are provided right in the audit. And we're actually going to walk through those today because they are also a great source of information in narrating your MD&A. How did we get from the change in fund balance to change in net position? What are those components? And there are some good conversion schedules that are required to be included in your audit. Reviewing your client communication letters. So there's obviously some required communications that happen at the end of the audit. The management letter, for example, if recommendations were made, do you agree with the language? Do you have a response to that recommendation? Our approach is those are always open for discussion. So certainly reach out to, your manager, your partner on your engagement. We're happy to walk through those. One of the most important pieces of this kind of review process once you receive the draft, as I said, was really nailing down those numbers. We really can't move forward with things like the MD&A or the statistical section for the certificate program until we know that those numbers have been nailed down. So once you've agreed that with the auditors, whether that's LNA or your separate independent auditor, really then we can begin drafting that management discussion and analysis. And this was really kind of the focal point of the training this morning. As I sit back and realize you guys do this once a year as part of the audit, Jen can attest that we get the privilege of reviewing hundreds of these each year. And so just the sheer quantity of what we do, you get into the routine. So the goal this morning is to kind of give our tips and tricks as it relates to the MD&A. But really the goal is to start working on the draft of that, coordinating with your auditors so that we have a final version that's available as we head into kind of the final draft stage of the process. I tend to put the MD&A on about the same list as a couple of other things that I think you guys all probably avoid or hate, or I'm not sure how intense the word choice would be, but seems like capital assets, the MD&A, maybe when you have some of those bond refunding journal entries that have to be posted, I would put MD&A in the top 5 of icky things that clients have to prepare. So hopefully after this morning, it seems less icky. That would be the goal. But we'll certainly kind of dig in and spend a little more time on that topic specifically. As I stated, I do want to cover the 2 required components that are client prepared typically within the Certificate of Achievement report. That would include your transmittal letter drafting. Normally, the transmittal letter really should not include financial statement number references. And so I do encourage clients, this really can be drafted earlier in the audit process. And as we go through some of the specifics of the transmittal letter, you'll see why I could make that statement. The focus here is really not to have discussions that are in the MD&A. So much of that information really is available and at your fingertips, really once you've kind of closed out the fiscal year. So This is a good topic for any of you in the program to just kind of take care of it right away. This could even happen before you start even prepping for the audit as far as making accrual adjustments and things of that nature. But again, here the goal would be to have that transmittal letter available to your auditors, as you're heading into that final draft stage of your report. And then obviously the statistical section, again, for any of you participating in GFOA's Certificate of Achievement program, really kind of making sure we have all those loose ends. There's sometimes some information gathering that needs to happen, as many of you know. So, making sure we're doing those reach outs, sometimes with the county, for example, with plenty of time to make sure we can get information back and updated. So we've kind of talked about, what do we do when the first draft comes? And then we have, in most cases, for most audit firms, the concept of a final draft. That's really where we want to nail down any final questions, changes to the report, including those client communication letters. We're looking for you all to provide some of the client prepared sections of the report, which is our focus today. That being the draft of MD&A, draft of your transmittal letter, and statistical pages, if those are applicable for you. The auditors then typically are working to assemble a final report. We always look for your approval prior to kind of generating that final pretty stamped PDF and bound book versions. This is typically when we work with you to ensure we have the signed representation letter. We're not allowed to release that audit until we have your kind of consent through the management representation letter. And then obviously coordinating with you all as far as timing, when do you need final product, coordinating board or council presentations, and things of that nature. So that's really the wrap-up process at a high level, but obviously we know there's a lot of drill down and preparation that happens, during that time frame. And so we want to kind of hone in, as I said, on some of those requirements and common reporting deficiencies for those client prepared sections of the document. So I want to start with the management discussion and analysis, or MD&A. As I said, it's everybody's favorite section, it seems like, to prepare. And so what I've done here is really walk through at a high level, what are the key requirements to be included in the MD&A. Certainly you have the option to add other discussions, but at a minimum, we need to ensure that these topics we cover this morning are in fact included somewhere within your MD&A. So I'll go through these in general, and then we're actually going to walk through a template MD&A. I have some really good notes. I'll walk through some of the sections with you. I also will take a look at those conversion schedules, because as I said, they provide a really good narrative oftentimes for explanations you might need to provide. Why did net position increase? Why was fund balance positive, but net position, ended with a deficit? And those conversion schedules really do tell the story of the financial results for the year. And so we'll kind of walk through those schedules as well, as it relates to then helping to prepare for that MD&A. So number one requirement of MD&A is really describing the government-wide statements and your fund level financial statements. So full accrual versus potentially modified accrual. And really the differences between the kind of information that each one provides. So full accrual obviously includes the reporting entity as a whole, all transactions, including long-term transactions, things like capital assets and long-term debt. And so as you actually, read that MD&A each year, there are significant sections that are dedicated to making sure the readers understand the difference between these entity-wide statements at full accrual and the fund level statements that you all are really operating under on a month-to-month basis. You are required to provide condensed financial information from those government-wide financial statements. So those are pulled right off of your statement of net position and your statement of activities for both the current period and the prior period. As many of you know, much of the discussion points in the MD&A from a narrative standpoint, really focus on why the change from the prior year. What is that trend analysis that's happening? So those condensed statements become kind of the basis for that discussion. You are required to actually state, did the overall financial position improve or deteriorate? That's a very specific question. Most of you tackle that on the very first page of your MD&A under your financial highlights, where we simply say, did net position increase or decrease, and why? One of the common themes you'll see throughout my slides this morning is that why. The GFOA in particular, and any other external reviewers of your financial statements, the MD&A is intended to be that executive summary to the report. And so what becomes really important is not just the numbers or the percentage change, but management's narrative of why those things have happened. So this tends to be one of the most common reporting deficiencies that we see in comments back from reviewers, saying, great, you told me net position increased $1 million, but you didn't tell me why. And I think this is probably, as Jen can attest to, one of the struggles clients have is like, how to explain that in a concise manner that the readers will understand. And so we'll kind of talk through, again, those conversion schedules that can sometimes be helpful to walk through some of those, trend analysis that you need to include. Number 4, you always have to address your governmental activities separately from your business type activities. So any of you that are reporting enterprise internal service funds that we report under, quote, that business type activity structure, that discussion really should be separate. They do operate very differently, right? Your enterprise funds, for example, already report on a full accrual basis. They're required to report long-term debt and long-term capital assets right on the balance sheet. Your governmental activities are generated from your fund level statements, and then we convert them to full accrual. So there's typically a little more discussion that has to happen around those governmental activities because they aren't initially required to be reported on a full accrual basis. We have to go through those adjustments to get there. So this is really the area that we're seeing a lot of economic type discussion also disclosed. The pandemic has obviously had some impact on all of you, and typically that's entity-wide, right? Which translates to these government-wide statements as far as discussion. So, what are some of those pandemic-related or economic impacts that are affecting the overall financial results for the government? Number 5, so we just kind of left the world of entity-wide discussion, and now we head into fund level discussion. You are required to discuss any significant balances in transactions, changes in fund balance, for example, for all of your major funds. And remember, major funds are any of those funds that would be disclosed prior to the notes to the financial statements in their own single column for reporting purposes. And that calculation is literally a mathematical calculation that we go through to say, what are the most significant funds for the government? And we report those as major funds. So MD&A is required to have discussion on any of those major funds that are reported within the financial statements. This also tends to be a common reporting deficiency. So, sometimes we'll see where you have a general fund and maybe a major special revenue fund and a debt service fund and a capital projects fund. And all 4 of those funds are major, but we only see discussion on 2 of the 4. So just remember, as you're in this section of the MD&A, and I'll kind of point this out as we go through the template, to ensure that you're talking about every major fund for the entity. And again, the focus here has to be on the why, not just the numbers. So if fund balance has gone up or down, or you've seen a significant increase, for example, we're seeing a lot of discussion on grant revenue this year with COVID-related programs, giving the explanation why, not just that intergovernmental revenues have increased by $1 million, but what is the source of that change? Number 6, then you are required to provide an analysis of significant budgetary variations for the general fund only at a minimum, okay? And that focus really has to be twofold. Number 1, if your original budget was amended, you should have discussion as to why. So what brought about the amendment, or why were the numbers different from what was originally passed in the budget to the final budget? And then a comparison of that final budget column to your actual results. So I call that the scorecard analysis, right? You set the budget, you maybe amended the budget, and now we have actual results for the year. How did those stack up against that final budget figure? So again, we need to provide the why. Why are there budgetary variances? This is also a common reporting deficiency that we see, of just not enough explanation around the variances between original and final budget, and then final budget and actual. Number 7, you are required to discuss significant capital asset and long-term debt activity for the year, and specifically provide reference to the notes where that additional information can be found. So it's recommended that these disclosures in your MD&A are in a summary format, and basically give reference back to the detailed notes then, where a reader can go find additional information on those 2 topics. The last kind of section is the requirement to disclose any currently known facts, conditions, decisions that are expected to have an effect on your financial position going into kind of the next budget cycle or the next budget cycles. And this focus should really be on things that have actually happened, not necessarily things that you're anticipating might happen. So it should, as I always say, be factually based. So that may be, within this discussion, still dealing with COVID impact related items. Maybe, we know that parking revenue is going to continue because we're not requiring, parking permit payments coming in. Things of that nature that you have a known fact and it's going to impact the next cycle that you're going into. And then it seems obvious, but make sure any of those amounts in the MD&A actually tie to the financial statements. I always say there should be a path within that MD&A. We should be able to find that number and trace it through the financial statements somewhere. So that's also an important reminder. If you're not sure where a number comes from, that's why the team is here to help, answer those kinds of questions. But hopefully after today and our discussion, kind of walking through the details of the MD&A, that will give you all kind of a good sense of kind of the source, where that information is coming from, and really some of those tips and tricks related to that. So if you bear with me here for just a second, I would like to share a new screen that will provide basically our MD&A template that I want to walk through in a little bit more detail with you all. Okay. So most of you, this probably looks familiar. I know most of our clients have used the LNA template for the MD&A, really since GASB 34 kind of came about. But for any of you who don't, the sections obviously are probably very similar. So what I tried to do here is really kind of break up the MD&A into kind of what I call 3 categories. One is what I call boilerplate language. Typically, it's language that we don't have to update every year. It's fairly standard. Much of that centers around that discussion of government-wide financial statements versus fund-level financial statements. We do review all of that, but from a client perspective, anything that's not highlighted in this template, I deem kind of boilerplate language, and you probably really don't have to do a whole lot or focus on it. So as you'll see, we kind of took, this whole template and kind of narrowed it down, sections that you really don't even need to focus too much on. So hopefully that kind of narrows the scope of what needs to be provided. Yellow sections I would deem as client to be prepared sections, or client to have some narrative discussion about what's going on. We typically only spend a little bit of time with you guys through the audit process. You guys are the best line of information as far as, the root of some of these changes for the year and really having idea of what the trends are that you're seeing. And so as the title indicates, it's really management's opportunity to have those discussions. The green sections that you'll see highlighted throughout here this morning are really, in my opinion, the sections that either Lauterbach and Amon as your auditor or maybe your audit firm would be willing to kind of update those charts and graphs. As we said, it's really important that those all tie back to the financial statements. So if we have to review them anyways, as I said, we do hundreds of them a year. So we're pretty efficient at getting those schedules updated on your behalf, which allows you guys to have kind of the base numbers and charts within the document, and then be able to provide some of that narrative discussion on top. So financial highlights is the first section. Typically we see a handful of bullet points. I would say it should be some of the high level things that you would want readers to know about the financial statements. I don't have it in this sample here, but I know many of them were seeing a COVID bullet point of maybe high level, what the impact has been. I think for many of you, it's been not as significant as maybe what was anticipated originally way back when in March of 2020 when we all started this. So we're seeing some of those discussions may be included as well. Obviously this would be a cycle that pandemic impact is still really important to the financial statements. Typically you'll see here, if you recall, we have to say whether financial position improved or deteriorated. That's typically in bullet point 1, net position increased. There you go. We've stated that the overall financial position has improved for this government. You might have discussion on your general fund results. If you have other important political funds, as I always say, or, areas that you feel like are of importance to either the citizens, your board, that certainly could be added as a bullet point within this financial highlights section. There's no real requirement for this section, but it is a great place to meet that requirement of, did your overall position improve or deteriorate? All of these numbers here really do come from either the condensed financial statements that you'll see, prepared within the MD&A, or like the last bullet point here, the general fund, really coming off of that final draft of your audit. What was the net change in the general fund? What's my beginning fund balance? What's my ending? And what's my percent change? And as we scroll through, you'll see that we're hitting kind of this section of what I call boilerplate kind of language. I know GFOA hates that, but that's kind of reality this morning. There's a lot of stuff in here that is standard required disclosure within your MD&A that really doesn't change year over year. And so my goal was to really kind of hone in and focus on those true client prepared areas within the MD&A. So I'll just flip through briefly. You'll see here in this section, we are providing that required discussion of what are the government-wide statements, how do they operate, how are they different than the fund level statements, discussion of full accrual adjustments. We then get into the fund level financial statements, again, talking about the categories within the funds. You have governmental funds, potentially proprietary funds and fiduciary funds. I know many of you have a variety of different fund types that you report. So, my goal this morning was to really provide a comprehensive template that would, in the language, address any and all of those categories potentially. Again, we get down into our governmental funds discussion. The really item here that can change is just your number of funds each year. So if you were to add a fund or close a fund, we'd potentially have to adjust that discussion. But again, same language each year. We go down into the proprietary fund discussion, whether you have enterprise funds and or internal service. And again, the template that I've provided that will be out on the website as well for any of you. So I've got kind of my notes written here on the PDF. You'll be able to access this. And certainly I have Word version and Excel versions of these as well if anybody needs. So again, still kind of boilerplate discussion. We've knocked off several pages in the MD&A, right? Yay, we don't have to focus on these. talking about the notes to the financial statements, other required disclosures, such as your pension required disclosures. So if you're an IMRF or if you're a municipality with police and fire, or if you have that dreaded OPEB, other post-employment benefit obligation, which might be in the same top 5, I think, with MD&A, capital assets. Yeah, so that's where we'll give reference of where the readers can find that information. So then we really get started into shifting from some of that boilerplate discussion into some of the nitty-gritty numbers and required narrative discussion in the MD&A. So we start first at the very highest level, which seems counterintuitive when you think about it, but we're going to start at those government-wide financial statements and provide both the condensed statement of net position or your balance sheet, as well as the condensed statement of activities or income statement. So remember, anything in green is typically what we as the auditors would be happy to update on your behalf. Yellow, again, is typically letting you guys put your narrative on those numbers. But this section really comes straight off of the first 2 financial statements within your audit, statement of net position and statement of activities. They're just both kind of grossly summarized just to give that high level view of what happened during the fiscal year. And again, on these schedules, we're always required to provide that comparative information to the prior year. I think the difficult part with where we're at in a pandemic is I think the explanations sometimes get a little bit complicated then when results don't look like they did last year because of the pandemic impact. Many of you have really done an excellent job of describing some of that. You know, if certain services were stopped, if certain fees were not collected, you know, this would be kind of that appropriate area to have some of those high level discussions. So we talk about net position, the components of net position. Again, really, if you see all of these numbers are, you know, we can tie back to those financial statements. We move on to our condensed statement of activities, again, coming straight off of the audited financial statements. And really that one typically takes up a whole page, right? Trying to take that crazy statement of activities and condense it down. But this is really then the section where you guys all kind of come into play. We have to give some narrative on those schedules. And so how do we discuss, you know, the changes in net position? And you know, from a simplified approach, I always tell clients there's really just 2 key components that are different from your fund level statements that you guys are all accustomed to operating on a monthly basis to then the auditors coming in and making those full accrual adjustments. And really it's capital assets and it's long-term debt. And so if you can focus on those 2 components when you're approaching your discussion of the government-wide financial analysis, that really should be the basis of a lot of your discussion points, because we know what happened at the fund level, but now we've taken that fund level, we've converted it full accrual, and we've accounted for those full accrual adjustments for capital assets and long-term debt. So while the fund level results are kind of the starting point for the government-wide financial statements, you know, typically we'll find that the impact from capital or debt can be fairly significant, and that really should be the focal point for some of those discussions. And again, remember, we need to make sure we're giving the why here. So why did governmental activities net position increase? You know, and here's an example, you know, net position ended in a deficit for unrestricted because of our outstanding pension and OPEB obligations. So not just saying it was a deficit, but giving the why. And you'll see here, it doesn't need to be overly complicated. We don't need paragraphs and paragraphs explaining, you know, why. I typically take your top 2 or 3 items and focus your discussion on those pieces. And again, as we go through, remember, we have to have discussion about our governmental activities separate from our business type activities. These numbers here are coming straight off of those condensed financial statements that we disclosed. You know, we're repeating the number in a narrative format, giving maybe some percent changes, and then providing that explanation. So again, you'll see here, you know, revenues for the governmental activities, you know, didn't exceed expenses. We recorded a deficit of 2.2 million for governmental. We've compared it to last year, and now we say the increase of the deficit in the current year was due to an increase in public safety expenses related to the government's public safety pension obligations. So very simply provided what kind of the largest impact was to that overall decrease. We do have some graphical type disclosures that we provide in the MD&A. Not everybody is into reading financial statements in an Excel format, right? And so our users of the MD&A tend to be, board members, outside entities, Moody's, Standard & Poor's, all of the users of your financial statements. And so sometimes in that graphical picture, you get an easier way to interpret what's happening. So there's no said requirements as far as what additional types of charts or graphs you might want to provide. But there were some kind of standard ones that really came out of GASB 34 that everybody tends to lean on. This one is outlining our revenues by source. It really does give you a clear picture of what are those major funding sources for the governmental activities. In this case, we've got, kind of a good balance between property tax and sales tax. That ratio in particular is always interesting, moving from, a municipality to municipality. If you look at, park districts and libraries, that property tax number is going to be much more significant. Those clients don't have the same funding sources available to them. So it is kind of a nice schedule that really jumps off the page as far as what are your primary funding sources. And again, that would be one that we're happy to update for you based on, the results in the condensed financial statements. The next one is really one I think is not as useful, but tends to be one that's always included in the MD&A. And what it's doing is saying that for your governmental activities, which are different obviously than your business type where you can charge a direct fee for services, right? So your enterprise funds, if you have them, typically charge a fee. The fee should cover their costs. And so in the business type activities, you would expect this type of bar chart to look much closer aligned between revenue and expense. We don't have that for governmental activities because you charge property taxes and because you take in things like sales tax and income tax, which we deem as general revenues that cover the general operations of the governmental activities for your entity. So this chart is simply really putting that out there. Public safety, for example, is really not charging typically any significant direct user fees that even hit, a chart like this. So, really just reiterating that concept that we have to have property taxes, we have to have sales taxes in some cases to help support, the services that are being provided by the government. We roll into business type activities discussion. Because business type, and there's the example of the bar chart that those look much more aligned because in theory, they should be functioning like a private business where there's a fee charged to cover those costs. The business type activities tends to be, I will tell you, a little bit shorter discussion because we're already full accrual, remember. Those financial statements have already been required to report that long-term capital asset activity and the long-term debt activity. But again, all of these are coming straight off of those condensed financial statements, provide a simple why, and move on with that discussion. So I want to take a break here. You'll see I've got some schedules kind of inserted right in the middle of the template, but I think this is a good stopping point to walk through some of those reconciliation schedules. So what I want to do is just kind of point out, I said the difference between fund level and entity-wide level really focuses on two key topics, that being your long-term capital assets and your long-term debt. And I want to show what that really looks like as you're walking through that conversion schedule. So all of you should have a schedule similar to this within your audit. Whenever I work on any MD&As, I immediately go and pull the reconciliation schedules. You have two of them, one comparing your governmental balance sheet to your entity-wide balance sheet, which is your statement of net position. So that's the first reconciliation. So how do I get from balance sheet A to balance sheet B? The second reconciliation schedule that we'll walk through really takes and compares your two income statements. So what happened at the fund level as far as did fund balance increase or decrease? Okay, great. And then how do I get from that point to change in net position on that statement of activities? So those two conversion schedules really are useful in helping to extract the why behind some of those changes in your governmental, activities at, that high entity-wide level. So let's start with the balance sheet. So we start with total fund balances. And Jen, make sure everybody can see. Obviously, I want to make sure the screen's visible, so help me here. So in this example, we start with total fund balances. So that might be our general fund, some special revenue funds, debt service, capital. But we end the year with about $7.7 million in total fund balance, okay? So that's our fund level results. We then have to account for those long-term related items. So both on the asset side of the balance sheet and the liability side of the balance sheet. So capitals first. We have a note disclosure that supports that we have $66.4 million in capital assets net of accumulated depreciation. So that is obviously a plus to equity. We have built an asset in theory that we get credit for and becomes part of equity. We then have a couple of sections, and all of these really do relate to long-term debt. We have changes in our deferred items. I think between all of us on this Zoom, this might be one of the most complicated topics that GASB has come up with. My best explanation for deferred items related to either your pensions or maybe if you have an OPEB obligation with deferred items. Deferred items are either a future revenue or a future expense. We don't have to recognize them immediately, and we're allowed to defer that recognition over time. So those could be assets on the books or liabilities on the books, depending on how certain components of your obligations move year over year and how the actuary is required to then calculate the impact of those changes. So, but know that they really are a component of your overall long-term debt structure, right? We kind of take them into account as part of those long-term debt adjustments. So debt is obviously not good for equity. So that's why we have the negative signs. And so we have to record things like our compensated absences. IMRF actually had an asset for this year, which I know many of you have reported just because of investment returns. Here we've got a police pension obligation. We have an OPEB obligation. We have some loans outstanding. We have GO bonds outstanding, a debt certificate, and accrued interest on our long-term debt. So what happens is we've gone from 7.7 million in total fund balance to net position of 39.5 million, meaning that the value of our capital assets is still far outweighing the debt that's on the books. And we've created an increase to equity, if that makes sense, on a full accrual basis. So any of these components that are significant, and you'll see in my example, I talked about the pension obligations because it's one of the biggest liabilities that jumps off the books, right? Unfortunately. And so it should be talked about in those government-wide narrative discussions because it is, as you can see, even in this example, a very key component of what's driving total equity for the year. If we kind of change courses to the income statement side of things, so we start the year with a surplus in total fund balance. So we've had an uptick in fund balance for the year of about $730,000, which is great. We then have to account for the current year activity for capital assets and long-term debt. So we've invested in new assets or had capital additions of 1.2 million. We have to recognize depreciation expense of about 2 million. We have to account for the changes in all of our long-term debt related activity. And so again, our dreaded deferred items, you do have current year recognition of the change in some of those deferred items based on GASB 68 or GASB 75 and how the actuary has to recognize those. And then we have changes in our liabilities. And if you recall, again, one of my discussion points in the entity-wide analysis was, in fact, if you recall, the increase in the public safety expense, because here is one of those significant impacts that reduced equity by $4.7 million, just the change in that police pension liability. And then we get to our overall deficit for the year. So what this is telling us is in the current year, the adjustments, we had a surplus to start with. Our capital activity actually reduced our equity in the current year. We actually had to recognize more in depreciation expense than we picked up in new assets or additional equity on the balance sheet. And then overall, the changes in our long-term liabilities were a deficit to total equity. So this is why I say these two schedules, you can kind of pluck right off of them what some of those significant transactions are to really focus your discussion on them. So as we continue, we've left the world of government-wide analysis. And if you recall, I said we're starting way at the top. And now as we go through the MD&A, we drill down to the fund level section. This section always seems more comfortable with clients because it's really how you operate each month, right? And so we don't typically get a lot of questions on this section, but I do want to point out just a couple of key items here. If you recall, and you'll see I've got this folded, you have to discuss every major fund. So make sure that you're not just discussing the general fund results within this section. If you have other major funds, you have to have some short narrative about what happened in the current year in each of those funds and the why, remember, not just numbers. Proprietary funds, since again, these funds are already full accrual, this section is focusing on the fund level discussion, but that really should be the same discussion as it is for the entity-wide. You're already full accrual at the fund level. I do see a lot of times there is some similar discussion. That's okay because there's not really a change from fund level to entity-wide level discussion. But again, if you have multiple major business type activity funds, you also have to report on each major business type fund in this section. We then get into the general fund budgetary highlights. As I said, general fund at a minimum. I know some of our park districts, for example, might disclose the recreation fund as well because they deem that as a significant operating fund similar to general. Certainly fine, but make sure the general fund is at least disclosed. And remember, you have to discuss any changes to the budget from original to final, and then comparison of final to those actual results. Capital assets and long-term debt administration, these come right out of your notes to the financial statements in a shortened, condensed version. Again, I won't focus a lot of time here. You know, capital, what were your major additions by category? We've given that necessary reference to the notes to the financial statements where readers can find more information. And same thing with debt. The last section that's pretty client heavy is really this economic factors and next year's budget and rates. Remember, you need to focus on any facts that are known as you've already kind of headed into the next cycle. Most of you are typically almost halfway through the next year by the time the audit is wrapping up, right? And I laugh, sometimes you guys are in 3 fiscal years, you're wrapping audit, you're in the current year and you're already thinking about that next cycle budget. So sometimes it's a little hard to wrap your head around like, you know, what year am I reporting on again? So the focus here, you know, my example is we're in April 30th, 2021 fiscal year in this MD&A. This section should really focus on what does 2022 look like? So what did you know? What were those known facts, economic impact that impacted what you did within the 2022 budget? And then requests for information as far as contact information. Jen, I'm going to take a break here because this really ends our MD&A discussion. And I want to make sure if there are any questions in the chat that we go through those before we shift gears to kind of going through the Certificate of Achievement Program transmittal and stat section.
So far, we don't have any questions. I
All
think we are
right.
covering everything perfectly. So.
Okay. I'm not sure I'll take that as a win yet, but we'll. All right, great. So we'll head back to our slide deck here. Bear with me. Jen, are we back on slide deck?
Yep, it's up.
Great. So if there's no questions for any of you who are either not in the Certificate of Achievement program or not interested in kind of learning about the program, by all means, we want to thank you for joining us. As Jen said, everything will be posted on the news section of our website, hopefully here shortly. But our contact information will be out there if you have any specific questions, tidbits, things you want to cover. Jen and I are both accessible to go through those. So we'll shift gears kind of quickly here to the Certificate of Achievement sections of the document. Transmittal letter. What I can tell you guys is over time, the transmittal letter is allowed to get shorter and shorter. It's actually what they recommend. I think some of the best transmittal letters are concise, 3 to 4 pages, maybe 5. You'll see there's a short list of required categories to talk about. Anything beyond that is really not required, certainly at your discretion of level of detail you want to go into. But for this morning, I'm just going to cover those required areas. So has to be on your letterhead, has to be dated on or after the audit opinion date. For many of you, we just ask you to leave that highlighted and we'll just make sure that it matches the opinion date once we have that decided upon. Should be addressed to your citizens as well as other interested parties such as your board or council. It should be signed by at minimum what they call the chief financial officer. That could be different organization to organization. I've seen sometimes where it's signed by 2 members of leadership, certainly fine, but at a minimum what you would deem as kind of your chief financial officer. And it has to state that you as management are, responsible for the contents of that report. You're basically taking that kind of ownership of, yes, we know what the financial statements are. We're aware of the results for the year, that kind of discussion. It should mention any legal requirements that the report is then used to fulfill. An example might be your EMA or MSRB debt continuing disclosure related requirements, things of that nature. It should address the results of the audit. So did you get a modified opinion? I mean, that would be something that would have to be discussed. Obviously, for most of you, it's a clean opinion, unmodified. But if you go back to your transmittal letter, you will see that there's, typically for all of you, a paragraph kind of talking about the results of the audit itself. You are required to have discussion on your internal controls, including objectives, limitations, back to that whole cost benefit idea as it relates to internal controls, none of them being perfect. So if you guys go back to your transmittal letters, many of you will see those sections within there. And really then high level profile of your government. Things to include in here, population and structure, are you a manager board form of government, how many board members, et cetera, what type of services you provide. Are there any component units that are disclosed within your financial statements? Summarize your budgetary process, including your legal level of budgetary control, which for most of you is at the fund level. You set that control, so you're not spending more than what your total fund appropriation or budget is. Information on the local economy, long-term financial planning, any of those financial policies that impact how you set the budget would be helpful. Major initiatives, maybe you have developments going on in town, things of that nature, and really any kind of significant transactions that have had an impact on the financial statements. You should have an acknowledgement section. So if you're part of the Certificate of Achievement, you need to reference, that you've received the award in the past. Also good if you're part of GFOA's Distinguished Budget Award, you could certainly mention that here. or the popular annual financial report. I know that one's becoming a little more popular these days, so we're seeing a few more clients participate in that program. Certainly, I know we have a handful of Triple Crown winners, so those would be clients who have gotten all three. Great way to put within your transmittal letter, that you're a Triple Crown winner. And then, thanking any of those individuals that were involved in the preparation of your report. We know you guys all know, but I think sometimes we go to board meetings and I think board members don't always realize how much work goes into this document. It's a lot of back and forth. Typically, you've got a lot of other departments even involved of getting information. So it gives you an opportunity to kind of thank those on your team or, leadership in general for their involvement. And you all are required to then direct readers to the MD&A. So remember, the focus here is not on the financial results for the year. That's what's happening in the MD&A. And so we want readers to understand who we are as a government, the services we provide, what does the local economy look like? And then we're going to direct people to say, and now here's the results of this year that you can read within the MD&A. So really important to not duplicate that information. I know that was quick. I know the bulk of the questions we get are really on the MD&A. So transmittal, keep it short and sweet. Make sure you've met those, criteria requirements. There's no need to discuss anything that's already been discussed in the MD&A. You can literally delete any of those discussions. 3 to 5 pages is, really where they're gearing that discussion. So statistical section, what I've provided here is some nice little source tips and tricks. For any of you LNA clients where we are the audit firm involved, that we specifically color code many of the tabs when you receive the draft of, what's your responsibility, what's our responsibility. I think most auditing firms out there will update the schedules that really are just an extraction off of another financial statement, if that makes sense, or maybe a schedule out of the notes. But I wanted to cover just quickly the sections. And again, these will be posted. I've put a source next to each, which is kind of our recommendation of where to go, to get that information. So financial trends, there's 4 primary schedules. All of those are typically generated by the auditor, again, coming straight off of the financials. Revenue capacity, I've put the 4 primary required ones. If you have significant sales tax that exceeds property taxes, some of you have required disclosures related to sales tax as well. But really kind of providing the source for each of these, when we are trying to work with clients and help identify information of kind of where we go. But most of that will focus on property tax, and the county websites are a great resource in this regard. Except Cook County. Sorry, any of you in Cook County. They're usually more difficult to extract this information. Debt capacity, this typically comes out of all your debt disclosures. Most of these are really exactly tied to the notes, to the financial statements. There's a couple of the schedules that pull in things like per capita debt or, personal income. Those are all linked in theory to some of the other schedules towards the back of the stat section. But again, I provided some recommended sources. I know the direct and overlapping bonded debt tends to be a sore spot for most clients. On that one, I would typically pull the most recent set of audited financial statements for each of your overlap entities. If that's the best, most recent information we can obtain, that could certainly be a source. The overriding goal with the stat section is get it as close as you can. With the best information that's at your fingertips. There's no perfect statistical section, I guarantee it. So do your best, use your resources, and get it as close as you can. We then go into those demographic and economic indicator type schedules. Those really come from a variety of sources. I see clients using census data websites, contacting your local school for school enrollment numbers, internal records, Department of Employment Security for unemployment. Principal employers, that one's also a sticky one. Sometimes it's phone calls. We know the list of top employers and you're picking up the phone and trying to get in touch with their HR department to get new employment numbers. Illinois Manufacturers Directory and Illinois Business Services Directory, also great resources that I know a number of clients use. And then finally, your operating indicators. These do tend to be the 3 schedules at the back that have to come internally. Your full-time employees, your operating indicators, and your capital assets. Your full-time equivalent, typically that would come from your payroll records, budgetary personnel counts, those kinds of things. Operating indicators and capital assets, this is typically where you need to engage with your other department heads, get feedback from them. And so those 3 schedules, I always tell clients, really important to try to get them out there to the other departments sooner rather than later as a best practice. I have provided a few resources here. The Certificate of Achievement program for any of you interested. There is a more recent checklist that came out. It's actually in a nice kind of checklist Excel kind of version, pretty user-friendly. It's obviously a lot. If you're a client of LNA, we go through that on your behalf each year, but certainly if you wanted to dig in, it's where I, extracted all the requirements from. And then also the GASB Statement 44. At the back of that GASB statement, there are tons and tons of sample illustrations, disclosures, requirements for each of the schedules that we just talked about in financial trends, revenue trends, debt capacity, et cetera. So certainly wanted to point that out as well. And then contact information. As we said, we'll be posting everything to our news page on our website. I would say check back maybe in the next day or 2, probably, Jen, just to let the team get everything uploaded. But certainly that will all be available, as well as the recording of this as well. So hope you found this helpful. I know it's a topic we've been asked a couple of times, and I think for any of our April year-end clients, you're probably in the thick of being involved in some of these client prepared sections, but hopefully for some of those other year ends, this will still be a good reminder as that next cycle happens, and you'll have kind of this resource at hand. So Jen, any additional questions from the group?
No questions from the group. I did just want to mention, though, we did have someone bring up a potential future training on capital assets. And mentioned, yeah, of course, as you mentioned, it's everybody's thorn in their side. So I did want to say out loud, as well as this client did also mention that they just learned that we have a capital asset software that we can utilize to assist our clients with that process as well, if anybody's interested. So we'll certainly work on that topic, add that one to the list, and then make sure you guys are checking your email for our September training. It'll be coming out here in the next week or so. So huge thanks to everyone for joining us, and for Jamie for that really informative presentation.
Thank you. Yes, and thank you for joining us, and hopefully we'll see you next month. Take care, everybody.